Are you looking for a way to earn passive income over your crypto holdings? Well, that's exactly what you can do with crypto saving accounts. And that's why in this video we are going to cover some of the best cryptocurrency saving accounts so that you can start earning passive income over your funds without a lot of effort. Whether you are a beginner or an experienced crypto investor, this video will be for you, or if you want to grow your cryptocurrency portfolio with minimal effort and without spending a lot of time, then these saving accounts will be one of the best options. So stay tuned if you would like to check that out. Before diving into the platforms, let's first define what a crypto savings account is. Crypto savings accounts are platforms that make it easier for you to earn interest over your cryptocurrency assets from just a single dashboard and a unified platform. It's as simple as depositing a certain amount of crypto and then start earning interest. They take care of managing crypto assets and getting you the returns so that you won't need to worry about smart contracts or any other technical tasks. For those reasons, most of the platforms considered to be crypto saving accounts are usually centralized and rely on lending, staking, or other products to generate returns, but make it actually much easier for you on the front end to start generating income without worrying about actually allocating your funds to different ways of generating income. Most of these platforms are custodial, which means that you don't own your private keys when compared with, for example, cold wallets where you can hold your private key, meaning that they are usually more secure. However, they do not offer the same possibilities and services to earn income, such as the crypto saving account. Nexo stands out as one of the best crypto lending platforms that offers different services to manage your crypto assets and grow your portfolio. The company was founded in Bulgaria in 2018. They currently manage assets for more than 6 million users across 200 jurisdictions. They have around a 300,000 social media following, and the platform also supports 60 plus currencies. Nexo is committed to successfully solving inefficiencies in the lending markets by creating innovative, convenient, and sustainable solutions by harnessing the potential behind blockchain technology. Nexo is pioneering a new digital financial system. With Nexo, you can not only earn interest over your funds and your assets, but you can also access instant credit lines, which are backed by your holdings. You can deposit cryptocurrencies such as Bitcoin, Ethereum, and also stablecoins like USDT and USDC, and many others, as you will see later on, to start getting interest. Nexo will use those deposited funds, your funds, and issue loans to other users, and then generate interest that's then distributed among the depositors. The interest rates can change depending on how much amount of a certain currency you are holding, especially Nexo, which is the platform own token, and by holding a certain percentage of Nexo, you can get higher rates. So if you are at the highest tier, you will earn higher returns on your overall portfolio and in all of those assets. Another factor that can influence how much you earn is the term. So if you have a flexible term, meaning that you can deposit and withdraw at any time, you will earn a certain percentage. And then if you use fixed terms, which are terms that have a specific amount of time for your funds to be deposited, essentially they will be locked and you can only withdraw after a certain amount, just like fixed deposits on a bank. Then you will earn a little bit more. And by adding up all of those small percentages, for example 2% plus 1% for the term, you will end up with a much higher return on your investment when compared with the standard, but also with other platforms. And that's also why Nexo is a good option if you just want to hold a portfolio of the most well-known currencies while also earning some of the best interest rates. As mentioned previously, Nexo also has the instant credit lines, and this will allow you to borrow against your crypto holdings without the need to sell them. You will maintain your deposits as collateral, and then you can access a certain amount of liquidity depending on the LTV over the amount that you have deposited, meaning that that original amount you deposited will still earn interest. So if you need the funds, you know how to apply them, you are sure not to lose them, and you still don't want to disrupt the performance of your long-term crypto portfolio, then you can use those instant credit lines. When it comes to security, they use high security standards and ensure custodial assets through some partners such as Ledger, Backed, and more, and this ensures the safety and security of your funds and instills some confidence in the investors. If you opt for fixed terms to receive interest in the Nexo token and to hold a certain amount of that token in your portfolio, you can boost your interest rates. All of these incentives encourage the users to engage with the Nexo ecosystem and ensures the platform success. When it comes to rates, they can change over time, but right now you can earn up to 30% for XC Infinity, which is the highest rate, and the stablecoin rates are also pretty good, but feel free to take a look at the table to see how much you can earn for each one of those assets depending on the tier and all of the other conditions such as the terms. Nexo also has their own credit card which will allow you to buy any products or pay for services without selling your cryptocurrency assets, but instead using a crypto credit line. I'm not a legal expert, but this may be seen as a loan, so there may be some ways to reduce the taxes over your crypto gains using the credit lines. You can also borrow funds at 0% or leverage your crypto holdings to borrow more funds and grow your position in a given asset, up to 3 times using what is called Nexo Boost. You can essentially borrow and buy at the same time in a single transaction. Throughout the years, Nexo has been constantly growing and aggregating more services, and they also have an exchange which is called Nexo Pro, although you can still swap your assets without using it. The platform is very simple to use whether you are using the desktop version or the mobile version. There's also a $25 welcome bonus on deposits higher than $100, so if you want to get access to that bonus, you can click on my affiliate link which is down in the description, which will also help out the channel. Another platform you can use to earn interest over your crypto is MyContainer, which is mostly focused on staking. However, it does have other products or features just like the other mentioned platforms. MyContainer is registered in Estonia. They started doing business in 2018, they have a goal of reaching 750,000 users and also want to increase the number of supported earning assets to 200, which is not impossible given that MyContainer is one of the options that has the most amount of assets available, even though some of them have options for cold staking while others only have option for custodial staking. And it offers a wide range of cryptocurrencies, including Ethereum, Binance Coin, Solana, Polkadot, Polygon, and also other lower cap or mid cap altcoins that provide higher staking rewards. Compound interest is already built in, which means that the more time you stake your assets, the more you are going to earn, and your staking rewards will accumulate and therefore earn you more over time. They do support multiple cryptocurrencies, they have a transaction history, and they also have Google two-factor authentication. There are also cash deposits, and if you do need to do those types of deposits, you will need to verify your account with KYC. In MyContainer, you only need the KYC verification for cash deposit, so if you want to deposit crypto and earn staking rewards, but you don't need to use the cash deposits, you can still deposit your crypto without verifying your account. When it comes to the products included on their platform, there's staking, which is custodial. Then there's also cold staking, which means that in that case it is non-custodial because you own your private keys. There's also mining, airdrops, and other options to increase your earnings. There's also a referral program where you can earn up to 20% rewards. When it comes to staking rewards, you can expect up to 108% on regular staking with deposits, or up to 97% with gold staking options. Unless, of course, after recording this video, they add other assets where you can earn higher percentages. You also get other benefits such as access to a cashback system, an exchange, and also a wallet. This platform is very versatile and the only one on the list that includes both custodial and non-custodial options for earning rewards, but they are also focused mainly on staking, not on lending, and they don't have any crypto lines or borrowing. With that being said, it can be a great staking as a service option if you want to stake but you don't have a lot of funds, or you want an option for easy staking where you can delegate and not need to create your own node. MyContainer doesn't have a platform token or coin, however they do have the power plans, which are 0, max and percent starting at 790 euros. And these include things such as removing fees from the exchanges, removing staking fees, removing withdrawal fees, and other rewards. CakeDeFi is a decentralized financial service provider founded in 2019 in Singapore, and to start using it you will need to deposit funds and also complete KYC verification, which is common in the other platforms that we will see later on. Their mission is to provide cash flow to cryptocurrency users and investors. They've already paid around $411 million in rewards. There are around 1.3 million retail users from over 190 countries which choose to use CakeDeFi or Bake as their platform, and that also translates to over $1 billion in customer assets. CakeDeFi offers multiple ways to earn passive income, including staking and liquidity mining. They support a bunch of different coins, including Bitcoin, Ethereum, Solana, USDT, and DeFi chain, which is also represented by DeFi. There are more ways to earn money with CakeDeFi, including referral bonuses, affiliate commissions, liquidity mining, staking, using the freezer for long-term investing, with the learn and earn section, and also using the wheeled vaults. You can make up to 10% through staking or up to 23% through liquidity mining, but those values may increase or decrease depending on the actual products that are available as well as other rates in the market. You can earn 25% of CakeDeFi commissions if you are a referral, but if you promote CakeDeFi as an affiliate, then you can earn $150 with signups and also recurring payments or commissions. CakeDeFi prioritizes security by segregating customers' crypto assets and using their own assets to generate income. You can also swap or exchange coins inside the platform so that you can withdraw your coins or move them to other exchanges if you want to do so. Another transparency and security mechanism that's available on multiple platforms, including CakeDeFi, is called the proof of reserves. In this case, you can verify your funds by accessing Merkle trees, and you would do so using your personal hash ID. You can also earn extra rewards and benefits using Cake VIP based on the number of allocated assets that you have on your account, and there's also Cake Elite, which offers other benefits as well, but this one would actually cost you money, either a monthly or yearly subscription. The monthly would be at $999 and the yearly would be $1,000 respectively. YouHodler is another company that provides savings accounts and also lending, but also has an exchange, a web wallet, and other services, including crypto-backed loans. They are regulated in Europe and also the Swiss financial institutions, and asset custody is secured by Ledger Enterprise. YouHodler uses Ledger's Vault to securely control its crypto assets with a multi-authorization self-custody management solution. They also have a $150 million pooled crime insurance. They make your digital assets work for you by bridging the gap between traditional finance and crypto, banking and trading, but also CeFi and DeFi. The total number of registered users in the platform is around 1,152,261. When you deposit your crypto assets on YouHodler, you can earn yields, usually through lending or staking. To get started, you will need to sign up and go through KYC verification like in other platforms, so it is usually the same procedure. However, YouHodler does have a higher minimum deposit, which is $100. You can earn interest on stablecoins, Bitcoin, Ethereum, and other assets. Rates can reach up to 12% for stablecoins and up to 15% for other cryptocurrency assets. And something else you might see as a disadvantage when compared with other platforms is that there's a maximum loan term of 364 days. Now we have a popular crypto platform which is called Crypto.com that offers a wide variety of services, and it was founded in 2016 with headquarters in Singapore. They have around 80 million users. The platform takes a mobile-first approach and also focuses on security, which makes it a reliable platform for managing your crypto assets and also earning yields. Crypto.com was founded in 2016. They have headquarters in Singapore and over 80 million users worldwide. Their mission is to accelerate the world's transition to crypto. The service that allows you to earn interest over your crypto assets is called Earn. Just like in other platforms, you just need to deposit some funds and you can start earning some interest. They support multiple assets including Bitcoin, Ethereum, stablecoins, but also AVAX, Cosmos, Phantom, DAI, and much more. The rates are quite decent and you can expect to earn up to 12.5% on your crypto assets, but to get a 2% boost, you will need to lock up a certain amount of CRO, which is their token, according to the credit card tier. As a Crypto.com user, you will also have access to Visa cards, and these cards enable you to spend your crypto in anything. You can buy stuff with it, so it bridges that gap between an actual crypto asset and being able to actually spend that to buy products. The different card tiers have different benefits that you can get access to depending on how much funds you have locked up in the CRO token and the staking requirements for that tier. You can get cashback rewards, but you can also get access to premium services such as Netflix, Spotify, Prime, and the exclusive access to a launch key. So those are pretty cool additions if that is something that you usually use. So that's also something to bear in mind when picking a platform, because some of them might have very similar rates but offer different benefits. The platform has a strong commitment to security, and they have an insurance fund that exceeds $750 million. Installing the mobile app also makes the sign-up process easier and also the KYC verification process smoother as well. And then from that app you can access a bunch of different services. You can start exploring all the features. You can start buying and selling cryptocurrencies. You can access price charts. You can participate in the missions and rewards as well, which are just an added bonus or ways to earn more coins. You are not only just getting access to saving accounts, but you can also do other stuff, such as staking, trading, and you also get access to loans and credit cards, which makes it a well-rounded platform and ecosystem that allows you to do a lot of stuff related with the crypto markets and not just earn interest. And for all those reasons, the platform has been growing a lot since it was founded. Like other platforms, you can also have access to proof of reserve, which allows you to verify your funds or also take a look at their reports. Ledn is a Canadian-based savings and crypto lending platform that was founded in 2018. Their mission is to help more people in more places experience the real-life benefits of their digital assets today while building generational wealth for the future. From all of the platforms, this one is the one that looks most like a traditional bank. They offer financial services to both individuals and institutional investors. Users can deposit Bitcoin, Ethereum, USDC or USDT and start earning interest on their growth accounts with Ledn. For BTC, you can earn 1% APY, with Ethereum 2%, USDC 8.50%, and with USDT 8.5% as well. The loans can help you avoid capital gain taxes, as they may be considered a neutral tax event, but it does depend on the regulations of your country. You do need KYC verification in order to use the platform. They incorporate federal laws and use BitGo for asset storage. Ledn ensures transparency, security and compliance by working with Genesis and conducting regular audits. They publicly disclose audits and proof of reserve every 6 months so that users can check that out and see what's happening behind the scenes. They do not have the highest returns or percentages when it comes to getting returns from lending, but their loans can be interesting if you are an institution or even an individual. Now we have Swissborg, which is another crypto platform on the list. Mainly it works as a mobile app that offers a range of services for cryptocurrency users. Here are some interesting stats about Swissborg. The total number of verified users is 700,000 and counting. There are $0.76 billion in total users' crypto assets value, and there are around 113,000 Swissborg token holders. Their mission is to build a spectrum of investment experiences that help users redefine health. They have your regular crypto savings or earn section where they support multiple assets including Bitcoin, Ethereum, stablecoins and all the others mentioned on the list, which allows you to grow your account passively. You can use it for both earning interest on your crypto assets, but also as an exchange to buy and sell assets and profit with the price differences, or just if you want to exchange coins or swap them while you are earning interest as well. They have something which is called the Smart Engine, which aggregates prices from different exchanges such as Binance, ETHBTC, LMAX and Kraken to provide you with the best liquidity. They have a very easy to use, user-friendly interface, and they also support multiple coins as well. Plus, there are also welcome bonuses for new signups. You can get up to 100 euros worth of CHSB tokens, which is what users get if they sign up under a referral link. When it comes to the standard earn rates, they are usually pretty low when compared with other platforms, except Ape, which is the highest one right now at 22%. They also provide proof of reserves represented by publicly disclosed information and dashboards provided by Fireblocks, which is a partner. Here are some of the average rates you can expect for each one of the platforms mentioned. The percentage values that we are using in this comparison can change over time, and we are only considering products that use or generate yields with one token and not things such as wild farming with pools that have two assets at the same time, because the risk levels are different, and so the percentages on those products and other products that involve more risk can be higher. In this case, we are taking a look at savings or staking. So we have Nexo at 10.8%, YouHodler in second at 8.8%, then Crypto.com at 7.14%, Swissborg at 4.5%, Ledn at 5%, CakeDeFi at around 10%, and MyContainer at 13.90% with the highest percentage. These percentages are just an average. Some platforms have more assets than others, they have different offerings, and they also have different terms to lend or lock up your funds to earn interest. MyContainer has the highest average rate and also the biggest selection of coins that you can earn interest over. Some of them are higher caps, but there's also a lot of mid and low cap coins as well. If you are always hunting for the highest yields, then MyContainer might be the best option for you. Nexo has the second highest average and has good rates for top market cap coins, but of course that also depends on how much Nexo tokens you have and the term of the duration of your loans. But if you want to invest in solid projects and earn the best percentages possible, then Nexo might be the best option for that. For example, if you want to earn interest on the top 10 coins by market cap or something like that. To earn the highest rates possible, you will need to earn your rewards in the Nexo token, which can actually be useful because you receive everything under a single asset that you can then rebalance or take out some of the profits to then put or reinforce a specific coin that's already on your portfolio. CakeDeFi has a smaller asset selection and not the highest rates, but it allows you to earn higher yields through liquidity mining. YouHodler has good rates for certain assets, including Litecoin at 50% and EOS at 13%, but on average they are lower than in other platforms. Crypto.com has built an ecosystem that incorporates a lot of different services and also benefits. However, to receive higher yields or the extra 2%, you will need to lock up a certain amount of their own token, which is in particular large sums. Ledn is probably the closest option to a traditional bank, but it only accepts for assets, for earning interest. However, they do have interesting options for borrowers. Swissborg does not have the highest percentages, at least when it comes to your standard earning or savings account. However, they do have other options to earn more, and the app seems to work very well. Now let's take a look at some considerations and risks. This is where we are going to address some of the issues you might face with these platforms and how you can protect yourself. First, we need to be aware that most of these platforms are centralized and custodial, which means that your funds might be at risk if the platforms have any liquidity issues or any other issues whatsoever. Before even investing anything, you might want to take a look at the company behind the platform. Once you are invested on the platform, you will want to monitor the financials so that you are prepared for any future issues. So if there's something approaching, you might be able to take your funds out before the platform actually goes bankrupt, like what happened with FTX or BlockFi. Which doesn't mean that this will always happen with every single platform. That's not what I'm saying. What I'm saying is that if you are prepared, you can avoid losing your funds and be ahead of most people. You should also consider only allocating a portion of your funds to these accounts instead of moving your whole portfolio there and earn rewards or interest using other products, and even different or completely different strategies. You might also want to allocate more to long-term investments and trading, or even other investing products such as DeFi protocols, so that you have funds in different platforms, but also both in centralized and decentralized investment products as well. Before diving in and signing up for any of these platforms, you will want to know what assets are supported in each one of them, or if you already have a plan and they support the assets that you want to actually deposit there. And you will also want to know how the rewards are generated and how the distribution of those rewards work inside of each platform. You don't have to go all in on these saving accounts or earn platforms at all just because you saw someone online saying they were the best. That doesn't mean that it is the only solution or the only way to earn interest over your crypto. There's a lot of options out there when it comes to earning interest or growing your crypto portfolio. There's staking, lending, yield farming, you can provide liquidity, and you can do it from decentralized or centralized platforms, which both have their advantages and disadvantages. To earn interest over your crypto or staking, you can check out stakingrewards.com, and then if you want to find about DeFi dApps that you can use to not only earn interest but also borrow or lend or earn in any other way that's available out there, then you can check out DeFi Llama, which aggregates all of that stuff and almost all of the protocols available. All of these investments or strategies come with a risk, so it's important to be aware of that. No matter how much you believe in a platform or project, it can always go down, and the more aware you are about that fact, the better you will be prepared for it. But what about actual platforms or sites that you can use to earn crypto? There's a lot of them. You have Binance Earn, you have Bitfinex Margin Lending, BeFi Finance, Stakefish, Lido, Liquid Staking, Anchor, Pionex Trading Bot, Qcoin Smart Rebalance Bot, and there's also many others, including exchanges that have earn options with different names. The choice of platform depends on your goals, but also if you want to hold a portfolio for a long time and then keep increasing your holdings, or if you want to just find the highest yields possible or even earn money in short-term opportunities. The approach will be completely different, and so will be the platforms that you will be using. Try to find out a good combination to invest your crypto funds in and to earn more crypto instead of just one single platform or a single strategy that still works with your goals and requirements. For more ways to earn passive income on your crypto, you can check out the card, which should be appearing right now at the top, or you can check out the links in the description or the pinned comment. That's it for this video. Thanks for watching, and I'll see you on the next one. Bye bye.